Good morning, traders. This is Michael coming to you from GammaEdge on Wednesday, January 22nd, with our pre-market morning strategy and briefing session. As always, here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. We're currently looking at our market trend model that we've been discussing really for the past 4 to 5 days. Actually 8 days, 7 to 8 days. We'll continue to see the bullish states stack on top of each other in the tick-tag combos. Make sure you're reviewing that in the market trend model. And then also in our GammaEdge framework, we have extensive education about how to use the market trend model, how to look at it, and how to help your trading if you're new here at GammaEdge. So all the way back to the 14th, we're discussing the first tag combos that were looking from a change from a bearish state to a bullish state. Again, these are extremely prone to failures we talk about, but these states tell you to get in motion or get prepared to get in motion, depending on what your trading time frame is and what your trading structure is. So the bolded CT, we continue with the lower left to upper right. That's our instantaneous look, white line there. Above the moving averages. We want to see this continue if you are a kind of short-term trader. If you're a medium-term trader, swing trader, you want to look at these moving averages. They're all stacked in the proper direction on top of each other. And they also continue from lower left to upper right with a positive slope. So until we see some sort of stalling and flattening of that bolded CT, which would be your instantaneous intraday, and then also a flattening or a rollover of the moving average as you continue with your progressive exposure and you continue to hold your swing trades. What we like to do, or what I like to do personally, is on day one, I like to get in motion what we call trial balloons, or send partial positions out to the market, and we get feedback instantaneously if those are maintained day over day. If this fails in intraday on the first day, or at least the next day, then you can exit those positions and you're just out with a small paper cut. If those continue in a bullish state and we start building on top of each other, and we continue from a lower left to upper right, you can continue to add progressive exposure day over day until we see some sort of stalling where you can take profit, or some sort of complete failure, which you would exit the trade. Again, not trading advice, but how we've back tested these over the past years and understand these is that would be the progressive exposure. Obviously, when we start getting into day 3, day 4, day 5, we start looking for the possibility of some sort of consolidation, possibly not failure. But when we start emerging above the colored ribbon, as we see here above the cyan, this can change to a longer term bullish state, and then the upside can be continue to increase as long as the structure and the sentiment is maintained, as well as the overall trend and the buyers continue to step into the market. So we'll watch this. Obviously, we have a TC4 plus trigger today. What that is a trigger day. That we will be entering P2P positions today. If it does fail today, then we advise strongly that you exit those positions on the first day. If this continues to tomorrow, it will change to a TC3 state, and we continue with those P2P positions. Obviously, we'll watch this intently today. But I would anticipate that we see some sort of probably consolidation coming up sooner rather than later. Not a complete failure. This would just be a consolidation in the overall market, possible profit taking, as we discuss multiple times here at GammaEdge in our sine wave of call speculation versus profit taking. And then we continue back and forth with that sine wave. So we'll continue to watch this again day over day. Bullish structure look for this morning. If you have not entered anything, I would advise you to go back and review everything, review your trading plan, and maybe just study this for a little bit and understand it a little bit better before you just jump into it, where we're at within this overall state of the market trend model. All expiries turned on. We are call dominated. We do see that presumed iron condor with the long legs and short legs, 60, 80, 60, 75, 60, 15, 60, 20. Remember back a few weeks ago or past week how we had 2 failures of the IC. They were violated, and then on the third day, it was maintained within the overall structure. So we'll see how this plays out today. So again, not saying that these legs cannot be violated. If they are violated, then usually the trader comes back the next day with double the size, and we'll continue to monitor this day over day. Obviously, these legs are extremely important within the overall structure and sentiment for the day. We do see COI up there at 6,100. and then PGX at 60, 75, 60, 80. So we'd anticipate those are important areas to the upside, and then to the downside, obviously, we see transition and we see NGEX down there at 60, 20. So within this, we're going to draw the drunken sailor range. We'll move this to 0DT in just a minute and discuss that. 0DT, net stat command laid out here. We see the upside there, 60.75, the downside 60.20 on the left-hand plane strike, and then we see the in-the-money calls there roughly around 6,000. Again, we've laid out the presumed short areas of the IC and the different legs, understanding that these definitely can be violated, but we'd anticipate that most likely price will stay within this overall range. If we do start getting above this 60.75, 60.80, 60.100, we do have the opportunity to move significantly higher, but we'll be watching the vol M command and vol D command intraday, see how market participants are positioning to aid this intraday 0DTE move. Again, we see a CY and PGEX up here matching there, and then NGEX down here at 60.20. So call dominated, decent amount of OI for a Wednesday, as we usually anticipate Monday, Wednesday, Fridays have higher OI. So 369,000 there. So again, we'll watch these areas intently. SPX game plan has been laid out very clearly to understand what would happen if price continues to move through these levels or stays within these levels or below these levels. So again, within the drunken sailor range, we do advise extreme caution, as it can be a little bit more volatile back and forth, and you can get chopped up pretty quickly. So we'll go to the trading view chart. Again, I've drawn the Ion Condor. Let's move back a couple time frames here. So what I like to do is I like to start with the weekly or daily chart if I've been away from the market, which I have for a few days. So quickly looking at the daily and weekly chart, I'll overlay some price levels. As you can see, basically we've been stuck within this overall range since last October. We did violate it to the downside, but then came quickly back up to the upside in December. So now we're back here. So we say, now what, right? So, okay, so plus GEX is 6,100. That's usually an important profit-taking level if you're using P-trans to PGEX, or just an overall level within GammaEdge that we like to look for an area to take profits. And we do see COTMC slightly higher there. Again, when OTM or out of the money calls become ITM, we'd anticipate some sort of profit taking. Again, the structure can continue to move up and continue to remain bullish, and price action can appreciate very rapidly. But those are the areas I'm going to be watching to the upside. I would anticipate some sort of stalling or reaction around plus GEX 6100, especially with the IC in place today. Also, not saying that we're going to stall there, not saying we're going to get rejected there, but I would anticipate some sort of consolidation. Reason is also on a TA standpoint, these previous holders, if they held all the way through this drawdown, are roughly now back to even if they're holding just underlying equity, obviously not options contracts. But if they're holding underlying equity, they're now back to even. So we can see some sort of profit taking as these holders that held all the way through this 7-8% drawdown just want to get back to even and try to exit positions. So we'll continue to watch that also. So we'll go to a 10-minute chart. So overall today, drunken sailor range is drawn. Pre-market, we're above the drunken sailor range, so that will be a key area to watch. If we fail drunken sailor range, we have the opportunity to drop back down towards 60.50. We do see COTMP there for all expiries, full complex 60.47. Let me see P-trans down here at 60.25. I'll update those on the 10 a.m. run. So to the upside, my risk reward is a little bit reduced from 60.80 to 6100, looking for a pullback down in the drunken sailor range or choppiness. So the first run up towards 6100, I just watch to see how we react. If we do get a retest of that 6100 in failure, maybe an opportunistic short back down to the top of the drunken sailor range around 60.75, 60.80. And then if we lose 60.75, 60.80, we would hold on to some sort of short position for a test down to 60.50. Other side of the equation, if we do get above 6100, we'd most likely see some stalling around 6115, 6120, depending on what the structure, sentiment, and vol M looks like. And then obviously we have COTMC up here at 6130 that I anticipate price to stall, or at least see some sort of profit taking around there. So that's kind of my thesis for today. AB. Basically, I'm going to just kind of be sitting in my hands, watching to see how price reacts from the opening range. And then if we do get up here towards 6100, see what sort of reaction we get there. So that's all I have for this morning. SPX game plans laid out, market trend models laid out. Also, make sure you're checking out the single stock discussion. We're continuing to increase our content in there if you're a single stock trader. So let's make it a great day, and we'll see you in the Discord in a few minutes. Thanks.